Hello everybody, and welcome back to 5 Minute Crypto, the channel where we cover the most important crypto news in just 5 minutes, back again with another crypto update. What to expect as $6 billion worth of Bitcoin options expire this Friday. This has left a lot of people clueless, wondering, and afraid because $6 billion worth of options sounds like a lot of money, and that means some heavy moves in the crypto market. Well, that is what it kind of sounds like on the surface, yet I have seen these articles come out literally once a week because there are a huge amount of options expiring every single Friday. So let's quickly cover this article partially because I think it is important to get some idea of what this actually means. So hopefully next time you'll be better prepared for such a move and you'll know what to expect basically. Bitcoin has been on a sloppy slope since its crash below 60K. Although interpreted as a correction, that was the result of this bullish momentum not being strong enough. Analysts have reason to believe that the bear market will be here for a while. This weekend, Bitcoin may sustain another intense dip once options positions expire. Some observers noted this on Twitter, explaining that $6 billion worth of Bitcoin, or 108,000 Bitcoin at the current market price, will expire this Friday. And the question, of course, is what does this mean? The pattern of institutional players who control some of the biggest amounts of Bitcoin luring retail traders to make sales has become a recurring one. This may yet be another window of opportunity for the big players to stack gains. Institutional players and whales will benefit the most from this event should it play out in their favor. Institutionals may refuse to pay out the contract so as to benefit from the drop in prices, and whales are also on the lookout for a similar opportunity as they have previously done, making sure that the market stays unstable to afford them the luxury of buying at a low and accumulating for much longer. Quote, will either big institutions could try to keep their prices low so as to not pay out on the contracts, or whales could keep the prices low to buy new contracts at a lower price ready for Q2, end quote, says a Bitcoiner who weighed in on the matter via Twitter. Prices could drop significantly. Another observer mentioned that Bitcoin, despite having a $1 trillion market cap, derivatives only contribute around 1% to that number. A smaller amount would have had a mild effect on the price of Bitcoin, but $6 billion could significantly push the price way lower than it already is. His tweets read thus, quote, although Bitcoin has a $1 trillion market cap, it is estimated that just $100 million in derivative play moves the price by about 1%. This was actually said by, I believe, JP Morgan before. So $6 billion can impact the price significantly. If the spreads are tight, then it won't have such a great impact. Maybe not at all, but they are not, end quote. At the press time, Bitcoin is down to about $55.3 thousand, bringing daily losses to about 4% and weekly losses to about 10%. The bear market could storm the scenes this weekend and drag prices lower, but the possibility for an upside correction cannot be ruled out entirely. And all I can say about this is this could be a huge opportunity to get some cheap Bitcoin or to get cheap into some altcoins as well, as there is a lot of FUD, basically meaning fear, uncertainty, and doubt. There's a lot of downwards pressure from some of the bigger guys. For example, right now we saw some pressure from the Fed coming in. I already talked about that briefly yesterday. The Fed has basically stated that Bitcoin is not really a currency, and crypto in general is not really currency. It's more like gold. It is speculative. You can't really pay with it. You can't really do much with it. He has a point to a certain degree, but we all believe that that is what crypto, or what pushed crypto down, together with, of course, going below $60,000. And I would say that this all magnified the downwards pressure a little bit. Right now, however, I would say that after Friday, some guys will actually be a little bit more excited, as we all have noted before, that a couple $1 billion worth of options, it doesn't really do too much for Bitcoin. If it really did, trust me guys, this will be the first time that we really notice something significant, as almost every single time that we cover this, nothing notable is coming from the options themselves. And if I'm mistaken, you better let me know in the comment section down below, because I have yet to see some very grave consequences from this, as literally both sides could occur. I would say there's a bigger chance that this is going to be a nice little dip that we can purchase to get longer term gains, but hey, in the end, we don't know anything for sure. One thing we do know for sure, though, actually, because I would say we do know some things for sure, is that starting today, inbound transfers from ANKR, Curve, and StoreJ are now available in the regions where trading is supported. Trading cannot place orders and no orders will be filled. Trading will begin on or after 9 a.m. PT on Thursday, the 25th of March, if liquidity conditions are met. We're talking about Anchor, Curve the AO token, and Storage. Yep, they have launched on Coinbase and the prices surged today. Little quick mention, little quick update, and that was it for today's crypto video. Thank you all for watching, and I'll see you guys again in another crypto update.